Well, quite an interesting day in the Treasury markets. Despite a stronger than expected jump in April producer prices, shows pricing power for manufacturers, and they did rise 0.6% last month. The 10-year Treasury yield hit a new low of 2.525% at one point today. When we say new low, we mean recent low. Okay, now that it's at 2.544%, why didn't we see yields go higher after the data? Let's get right to the floor show. Traders at the New York Stock Exchange, CME Group, and the NYMEX. I mean, Keith, this seems obvious to me. If there's fear in the markets, we would then see a move into Treasuries, and that's what we saw yesterday, too.
Yeah, well, you stole my thunder a little bit there, Liz. That was the main point I was going to bring up. As you know, bonds are not my thing, but we look at all kinds of variables, and we absolutely look at the 10-year Treasury yield. So the question becomes, why is the 10-year Treasury yield not moving when we get PPI data that was stronger than expected? Today, it's a bit of a troubling sign, and what I'm hearing people talk about and what we've surmised in our own right is that people are really concerned about growth in this market. That's what the 10-year yield is signaling, and therefore, you've got to be concerned about valuations inside of this market. The price to sales ratio inside of this market is at all-time highs. So if you take a look at valuations, the market just kept zipping forward, but the 10-year yield is telling you that the market doesn't believe the growth story in the economy going forward, and therefore the valuations are going to be too high.
Okay, but MarketWatch has a headline that says this market is indicating that the bears are about to have a win. In fact, I'm just looking at MarketWatch in this building here at News Corporation and Fox, and it says stocks are telling you a bear market is coming. Keith, are they? I mean, all we've seen are record. Is that the signal that we look for on that?
It's one of the signals, but there's lots of other things that we look at that we've gotten smarter about trying to call direction of the market. Right now, we're still short-term bullish on this. We don't see any indication that we're going to have a massive sell-off. You're right, the markets are flatlining a bit here. We'll have to see that happen a couple more sessions before we get truly worried.
Let me bring Trent in. He's at the CME. What signs do you see that a bear market is coming? I get a correction, but a bear market overall?
You know, I don't get that sign. I'm not expecting a bear market either. And I think, you know, with respect to the 10 years as an indicator of a bear market coming, I think what we're seeing more in the 10 year as far as what's contributing to the strength in the futures itself and the yield falling is the relative value of the U.S. 10 year versus what we're seeing over in Europe. You know, we have these artificially suppressed rates in Europe. So if you're looking for a comparable fixed income product, you know, what are you going to do? Are you going to have a German 10-year paying under 1.5%? Or did you go with a French 10-year under 2%? So when you look at it through that lens, all of a sudden 2.5% for a U.S. 10-year, which everyone would agree is a much safer investment, it really doesn't look too bad. And you know that there's a big enough disparity in the relative value where these things could still continue to fall as far as the yields here in the U.S., and it wouldn't necessarily precipitate that we see the equity markets fall in addition. The two, for the short term, could be mutually exclusive, which is counterintuitive to historical price action.
Well, I'll tell you where there is certainly bullish action, and that's in oil at the moment. Ira, looking at all that's happened, we do have from the EIA a short-term forecast for the summer that says gasoline prices are going higher, oil probably goes higher, and boom, we're at $102.16 a barrel for light sweet today.
Well, I'll talk about gasoline. I think we peaked earlier in the actually in the season here. I think about 6 weeks ago, retail gas was about 308. Now it's below 300. But yeah, we had draws in gasoline. We're going to be a very sensitive number. So we're looking at gasoline draws today. So they're drawing supplies. They're building in crude oil. Crude oil 102.60 was the session high. We're right up against the resistance here at 102.50. So I'm surprised we're even above 100. 102.50. If we could take it out by the end of the week, we could be at 105.
Wow.
So it's still pretty strong here.
Ira, we'll watch for that. Thank you.
Okay.
I like when these guys come on and make a bold prediction. Thanks so much for joining us on the Floor Show.